Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Mike Walters, CEO and co-founder of Form3, a cloud-native payments platform used by banks and regulated fintechs to move money at scale. The company provides fully managed payments infrastructure that supports high-volume, always-on processing without the operational burden of legacy systems. Its API-first design gives institutions a single, consistent way to run and modernize their payments operations. Walters has helped steer the company from its earliest days, first as Chief Product Officer and now as CEO, overseeing strategy, product development, and key client engagements as Form3 has expanded across domestic and international payment flows. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Mike, thanks so much for taking the time. Great to be with you.
Great to have the opportunity. Nice to meet you.
So your company has grown quite a bit in a fairly short period of time, and rightfully so. You have a long background in financial technology, particularly from the financial institution side. So maybe let's get started with the founding of the company.
Yeah, for sure. So founded in 2016. So we will be reaching the dizzy heights of 10 next summer, and a small group of 4 of us co-founded the organization. And it's one of those poacher come gamekeeper type narratives. So, we were buyers and users of payment technology inside large banks. And I guess we saw quite quickly how credible public cloud was becoming, the types of user cases that were really being leveraged. So I had the idea of seeing whether the world was ready for moving payment processing onto the cloud and onto a platform. And that's really what started the organization back in 2016.
And Barclays was an early investor, I believe. And so was it as simple as going to your colleagues there and saying, hey, we want to start this, you want to back us?
No. So actually, it kind of happened the other way. I think we thought we were out in the wild and doing our own thing. And one of the things we learned quite early was that, look, if you want to be serious about doing something as important as payment processing for banks, then they want to know you and they want to be quite close to you. And so what we discovered with Barclays and then subsequently with other big customers was that a really good way to align understanding of what we were doing, their risk folks getting comfortable. They understood a business that was, small and growing and how that worked. One way to do that was to have a much more structural relationship, I guess, an investor relationship with some of our biggest clients. And so that happened first with Barclays, but, since then, Visa, MasterCard, Lloyds, Nationwide have all invested on the back of commercial relationships for us to do work for them.
And I guess, was it pretty obvious that these financial institutions needed a partner, a tech partner like yourselves?
Well, I mean, we've all worked with banks and I think, there is a lot of technical expertise in banks, but they're also super complicated on the ground. And so our recognition, I guess, realization from the customers is they don't really want to be, if they can help it, spending their budget on, the slightly less glamorous sort of mandatory work, really. And that was where a lot of the budgets for all of these financial institutions was going and continues to go. So, really where we got to with most of these organizations was that they would just rather be spending their budget on customer experience, on growing their business. And the stuff that just needs to work, you need to invest a lot of money in, keep current, keep regular, and really build expertise in. So we sort of built a niche around that experience and that expertise and building a platform that those customers could access, really so that they could spend their time, money, and effort not on the plumbing, but really on building the customer journeys and agenda that they have. And that's pretty much been the same narrative that we've seen from, the really large sort of fintech clients that we have, US banks that have been using us across the UK and Europe over recent years as well. Similar challenges.
And tell us about your co-founders. Did you all work together at the same company?
No, so 2 of us had worked in the same company, but slightly different places at the same time. So Michael, who's now our chair, and I both worked at Barclays. We were joined by Steve, our CTO. He came out of high frequency trading platform building in Asia. And actually, that's really been important for us because, this idea of how do you make a cloud infrastructure like super resilient, super scalable and really fast? The place where a lot of that has been really stress tested is in, quant and high frequency trading. So he's been great for, how you build the right architecture and the right engineering teams to do that. And then at the time, we were also joined by a chap called Adam Molson, who came out of Swift, and he had a lot of relationships with the larger banks, but also some of the sort of sponsored sort of innovate and fintech companies that were emerging in the UK in 2016. There was an explosion of challenger banks and organizations trying to do something different in fintech, and he was really well plugged into that. So it was a bit of a mishmash of, I guess, different disciplines, but skills that, if you're trying to found a business on your own, it's really difficult. You probably over-index on some things and less on others. And so we were able to sort of balance that out as we were growing.
Let's get further into your market. You mentioned that you sell obviously into financial institutions as well as fintechs. Are those basically the two categories, or are there other kind of scenarios where your solution is applicable?
Yeah, good question. So I think we also took a decision quite early that if you're going to do something that is tough, then sort of stay focused on it. So our clients, in order to use our technology, because we are effectively plugging large scale regulated businesses into the payment infrastructure of a country, those clients themselves have to be regulated to move money. And so that means they're either banks, credit institutions, or fintechs that have licenses to move value. And so over the years, those that have moved faster have typically been, they were born in the cloud too. They're native in a type of technology. They understand SaaS and platforms. Those guys moved first. The large sort of tier one retail banks for us sort of moved second. And then I guess what we saw is the larger global fintechs and sort of non-UK, non-European banks entering the market. So we've really sort of ended up with those three groups of clients, but they all use the same platform. They all use the same product. And, we've been really clear that that's the best way to kind of honor that promise of it's on us to run it and, our clients can consume it.
And are they purchasing an enterprise subscription plus a consumption kind of portion to the pricing?
The commercial model for us has always stayed pretty consistent. And, one of the problems with being in a large complex organization running lots of enterprise software on-prem is you don't really know what it costs you. And so your ability to translate all of that technical software, infrastructure, security, plumbing into when a customer asks me to make a payment, what does it cost me? That's really difficult. And so, we set out at the beginning to say, actually, we should not only simplify how a customer consumes our tech, so API first and one and only set of APIs that we don't break, we should simplify the pricing model as well. So customers pay us for the payments that we process for them. And that means that they're able to really transparently know the sort of the drivers of that from their customers at the front end, whichever channel that customers are using, whether it's large institutional or retail. By the time we get it, those transactions are the same.
You mentioned, having some clients, non-UK, non-Europe. What portion of your client base is outside of Europe?
No, good question. So founded in the UK. So, we've grown really quickly in the UK. So, we have a very significant market share in the UK in real-time payments, also for more of the ACH and sort of salary-based payments in the UK. We've been growing really quickly in Europe for organizations that are working across Europe. So people like N26, Klarna, some of the US banks that are looking at both UK and European, how do we do that in a joined up way? And we went live in the US 3 weeks ago for our first production customer in the US. So we've been building there for a couple of years. And obviously we have a big lift to make sure that what we have on the ground is ready for the largest customers in the market. But that's new for us. So we're scaling out fast in the US. But we benefit from a lot of those clients we're working with in the UK and Europe are either US businesses or have significant US presence. And so, that's how we're continuing to simplify for those customers.
Curious, because, it sounds like from the surface that things have gone pretty smoothly, but I'm sure that's everything but the case. Like, tell us about maybe one of the more challenging moments in the company's journey so far.
Yeah, I mean, when it all goes well, it's great. I think somebody once said to me, that the journey is not a straight line. It looks like it when you look back, but, it is a slightly wavy path, right? So I think for us, like many organizations who grew and scaled, particularly in the sort of 2020, 21 period, it was an era of different expectations for investors and different capital landscapes. So we grew really fast. We invested really quickly. I guess like many organizations, we had to reset the size of the organization. I think for us, actually, that coincided with having done significant lift to build the platform itself. But that's still a really painful activity as you're making sure the organization is the right size and shape for the future. So that's been tough. That's been a challenge. And I guess we've learned a lot along the way. So, nobody had done this before. And so what does it really take to run billions of transactions for large tier one retail banks over a public cloud infrastructure? That just not happened before. And so, we've learned a lot about how to do continuous change. We've had to V2 the entire platform to get us to the point where we operate now across all three large hyperscalers all the time, continuously for all of our flow. And all the engineering challenges that go with how do you even do that? How do you make that work in a way that customers understand and that, delivers a promise to them? So it's definitely not been a straight line. But then that's one of the things that makes starting a business and growing one interesting.
Was product market fit pretty obvious in the beginning? So it was mostly about execution?
I think we had a pretty good grasp of the problem, but I don't think we'd quite worked out when we started what the best way to solve that problem was actually going to be. So I think, like many organizations looking in on sort of complex legacy enterprise tech estates in banks, you can look at that for ledgers, you can look at it for compliance programs, risk programs. They're very similar, those challenges. I think to start with, we had thought maybe the way to do this was to host best of breed legacy tech ourselves. So effectively just become a hosting option for other people's software and IP. Very quickly, we worked out that if you really, really want to operate as a platform, you've got to be born there and live there. And so we moved from what we thought was going to be a market entry of sort of package together some things and, build a business out of how they operate together to, do you know what, actually, we've just got to build IP. Like, we've got to build a business that really, really works natively and scales natively. And that was a big decision for us because that's slower. It's a lot more expensive. It's a lot more technically challenging. But I don't think we would have the customers we have or the scale that we have if we'd been trying to do that with software from 20, 30 years ago.
And that decision to build your own proprietary platform, that pushed out your commercialization, your ability to bring in, how long did it take before, you started bringing in dollars from clients?
Yeah, so we were revenue probably about 18 months in, maybe 2 years in, certainly not longer than that. And we did that by being really narrow about the products that we took into market to start with. So it was real-time processing. It was in the UK market. It was fintechs that could move fast. It was a very specific sort of set of capability, which got us there. And then we sort of expanded it out from there into markets and the functionality that we offer. We probably would have got there a little bit earlier. But one of the things we also found was that if you take, really big sort of enterprise software and you try and make it fit into a new technology paradigm, actually that's not fast either. So we would have probably spent a similar amount of time turning stuff off, working out how to make it multi-tenant, working out how to have it effectively scale, even working out how to run it when you really start having customer 2, 3, 4. I think, to be honest, we probably would have found a similar kind of time. But I think the way we've tackled it has just meant that we've been able to grow from that point pretty consistently forward.
Tell us a little bit about yourself. Are you a computer engineer by training?
I'm really not an engineer by training. No, I'm a product guy. And so for me, the really interesting challenges have always been, understanding what customers' priorities really are, trying to work out what they mean sometimes rather than necessarily always what they say, and then translating that into language that, engineering and technology folks can take forward. But no, I have done my fair share of managing client relationships, big corporates and financial institutions in the past. But really, for me, I think the interesting thing is if you get a chance to kind of almost start a technology again in an ecosystem, what can you do with that?
Did you start out at Barclays? Was that kind of your career path? Or right after school, you went into the financial industry?
Yeah, I did. Yeah. I went straight into what was effectively their management training program, their leadership program, and did a few stints in sort of strategy, lending, and then through different groups of customers. But I think quite early, it's super interesting. So, being in a bank or an accountants or a law firm, you get to see lots of different sectors, get to see lots of different types of businesses and what's important to them and how they work. But then very consistently, they need lending, they need payment activity, they need somewhere to save their deposits. There's some sort of basic things, however big the organization is, that just needs to work. And I guess product for me was an interesting step because instead of doing that a deal at a time, a customer at a time, you can change whole groups of experience for clients at a time. So just the amount of sort of impact and momentum that you can make into a market sort of steered me less from sort of individual customer deals and more towards, how you build products.
Mm-hmm. You've brought in some good investors. Goldman Sachs is one of your backers, and would love to hear about the value they've brought to the organization aside from simple financial capital.
Look, again, great question. And many founders and people running organizations will have different experiences of when is the right time to take what type of capital and from what types of organizations. And it's a tough call, right? For us, we were always really clear that whilst capital was important, because we have strategic investment from large customers, actually one of the things that we really wanted to get was validation of the financial model, understanding how did we fit into the landscape. And I think Goldman's and many of the sort of VC and growth equity organizations give you a really good read that you can't necessarily see yourself because you're very much in an industry, how you're operating across. So bringing in investors with that type of experience was really important. Having them represented on our board was really important. And I think particularly in the case of Goldman's, we have Moulton and 83 North as VC investors as well. They've both been great as we've been growing too. I think growth equity is interesting because of the evolution of sort of the operator community. Mm-hmm. So, different individuals that are sort of aligned to those investors that can provide you with experience and expertise. And, we've lent on that in a few places around how we deal with change and transformation, how we deal with sort of the people agenda as well. Because as you're scaling, you've not necessarily done those things before, and having, those operators to sort of sanity check and bounce ideas off has been really helpful for us.
Last two questions. One is, can you tell us about a person who's had a profound influence on you?
Oh gosh, as cheesy as it sounds, my wife has had a profound impact on me.
I like that.
So we met at university. And so she's been on this whole sort of roller coaster journey of, what is it like to be inside a large corporate organization? How do the politics of those things work? What are the drivers when you're really after promotion and progression and all those good things? And then I remember her face when I just said, you know what, I just don't want to do this anymore. And, having somebody in your corner when you're making those sorts of life decisions, really, really important. And, she's been fantastic.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah, so I'm a bit of an environmentalist, I guess. Aside from the hobby of woodwork, which keeps me sane, I like making chairs and chess sets and that kind of stuff. I do like to support wherever I can some of the challenges that the world has around ecology, but working really closely with reintroduction of a species into our sort of local community. And I guess just thinking a little bit more about the stuff that isn't money. It's funny when you're, not only from a career perspective, but when every day the thing that you're actually working in physically is money and payments and transactions. Mm-hmm. That's not actually the world that you can live in, operate in. And so I try and spend as much time outside as I can and support how we maybe have a slightly better impact on the world than maybe we have done in the past.
Wonderful. Well, Mike, I want to thank you again for taking the time. It's been a great conversation.
Thanks very much.